everybody, and welcome back to the Dash Trader Newsroom. Earnings season is in full swing, but is a correction in the cards. The markets have been pulling back for the last couple of days. My name is Michael DeJoy. I'm the Director of Educational Services here at Dash, joined by my co-host, Jill Molandrino, Global Markets Reporter at NASDAQ. Jill, how are you doing today?
Good, doing well, thank you.
Great to have you, as always. And we're going to jump right in. We've already had the big banks' earnings come out, and I mean, it seems that they have led the markets lower. The trend so far seems to be that banks beat on earnings thanks to trading revenue, and but they guided down on forward guidance. Is this the trend for the second quarter of 2024? Well, first quarter of 2024.
Well, there's a couple things here. So we're still really early in the earnings season. About 12% of S&P 500 companies have reported, and they've been decent. But to your point, guidance is below expectations of what the street would like to see. But you have to remember where we are in the calendar. They are not going to guide firing on all cylinders when it's the first quarter, right? You have more insight into what the year is going to look like when you're reporting Q3 and Q4, right? So that's part of the seasonality aspect of it. I think companies have done a good job operating in higher interest rate environments. Their margins haven't been squeezed as much. Clearly, that's due to pricing power that some of these companies have. But I think, guidance is really, it's too early to give full year. We still have, a year's worth of reporting to go. So I think that's part of it as well. I think, perhaps the banks don't have as much sway on earnings as much as, the sectors that have been performing. So the focus is really going to be on, AI companies and other areas of tech that have really led the way in terms of these indexes moving higher. When it comes to the banks and having muted guidance, still with the higher interest rate environment, there's always a concern of, lower loans if people aren't, getting loans because of higher interest rates. And then credit quality, I believe, is mentioned in a few. And then there's always going to be the concern about the consumer because there's so much debt has been incurred. So, but these are usually ongoing concerns. I thought it was positive that investment banking, trading, the capital market side of the house, that's what was doing really well, right? You want to see capital formation, you want to see companies coming public. That's an indication that the capital markets view the economy is healthy. So I think like the bigger tell is there.
Yes, absolutely. So let's jump right in. We also have gold hitting all-time highs. The old man has been on fire. I mean, gold is I think Goldman Sachs came out with a very, very high price estimate, all-time high kind of territory. What are your thoughts on gold and, of course, oil, which also just pulled back below $85 a barrel, which might be good again in the fight against inflation? But I do know that overall the Fed had indicated that it wasn't happy with where inflation was in relation to where it thought inflation would be, closer to that 2% inflation level that they're looking for. So what are your thoughts on gold, oil, and the constant ongoing battle against inflation?
Yeah, well, I think, Mike, I mean, you really hit on all the points there, right? We're seeing gold prices at historic highs, and that certainly has driven up demand for gold ETFs. Like you have GLD up there as an example. We know that gold is used to diversify away from stocks and bonds. It has a lower correlation to the S&P 500 relative to other asset classes, and it's also a popular hedging mechanism as it relates to geopolitical risk, and there's plenty of that's out there. I think, with Fed funds rate where they are, the prospect of falling rates, a weaker dollar, that is also causing gold prices to spike. So, there's other areas such as demand for jewelry remains really robust in India and in China. And, about half of all the demand for gold does stem from gold jewelry, and a quarter of that comes from investments. And when you think about it, with China, in addition to the demand for gold, the collapse of the nation's property sector, its equity market, Chinese buyers, they're thinking of that in the context of geopolitical fears and not as many alternatives in order to find stores of value, considering that their housing market is not doing well. So it's kind of there's a number of things that are creating perfect storm for gold to be where it's trading at.
Yeah,
As
and certainly India is, they say India is on target to eventually even eclipse the Chinese economy. And I know India is a very big, buyer of gold in general, like
well, I mean, India is a prospect for investment in general.
in general.
Is a hot market, right? Their population is young, they're growing, they're more educated than ever. There's a number of reasons as to why you would want to invest capital into India. But oil is interesting, and because of the fact we're in an election year,
Mhm.
clearly there's a desire for the administration to keep oil prices down,
Yeah.
right? There's this perception out there that inflation is out of control, the economy is bad, which it's not. I think it really depends what narrative you're listening to. But
Yeah.
if you're our GDP, our economy, 70% of that as a consumer. If you're feeling prices at the pump, and we saw this during COVID, that's going to take away from discretionary spending. You have to make a choice of filling up the car and getting to work versus perhaps going to the movies, right?
Yes.
So there certainly is a desire by the administration to keep it low, but then again, there's heightened geopolitics in the Middle East. We know that's where a lot of the oil production comes from. So it's a delicate balancing act. I think what happens with Israel and Iran will also be a big driver. So that $85 mark and anything higher than that
Hmm.
really shifts some of the narrative around.
I think that I'm glad you touched upon the whole Israel, Iran because that was the reason why, oil prices pulled below $85 a barrel. They were up there really on concern about, the conflict expanding. Certainly that is still a possibility, but it seemed like those fears abated a little bit, that there wasn't a quick retaliatory strike after Iran struck Israel with the drone and missile attack. So I think that kind of abated that fear, at least for the short term. So there's all kinds of stuff going on at Google. But is that really an indication that there's going to be more employee activism? I guess that would be the best way to put it. What is the risk of employee activism, at the big tech companies, like what just went on with Google with this multi-city protest and a company sit-in and 28 employees being arrested? Is this a valid concern across the tech space and in the economy in general? So what are your thoughts on that?
I don't think it's necessarily just tech as well. I think every industry, particularly for Fortune 500 companies where their DEI strategy is public, they're also going to need to consider that employee activism is now part of that calculus. Certainly, we saw that through COVID, where these can be impactful. So I just think it's something else that needs to be put in the formula of how employers and employees think about activism, how they're doing it. You have to remember too, I think part of what this is, you have to think about the safety of other employees as well. And that has to factor into it. Even outside of what happened at Google and other firms that have experienced employee activism, we saw last week that the Chicago airport experienced a number of delays because there was protesters that cut off access getting in and out of the airport, and we saw that in a number of other major cities as well. So I think we're at an interesting cultural moment here, because if emergency vehicles can't get through, if people can't make flights, that becomes a public safety issue.
Right.
So it's going to be interesting to see how this is handled, from the public perspective and also private company perspective, because it seems as if it's gaining traction.
Yeah, I had the chart of Google out here, and it certainly didn't see like any of that affected the stock yet on its chart. Google seems to be holding up well. Now this brings us to kind of a big. We've had a tremendous run pretty much from October all the way until pretty much about a week ago. The markets have been up incredibly. I would say that was up on the market was up on the AI hype, and or AI reality, whichever you want to call it. Certainly the EV craze as well. Recently Meta just announced that it has this new AI assistant, but then the markets have been down the last 4 days. Additionally, Tesla announced layoffs. I think it was last week. Which certainly affects New York, specifically Buffalo. Directly with Buffalo losing 14% of its staff. Needless to say, is the AI boom and the EV craze over? I mean, certainly it seems like the EV craze is more over than
Mhm.
maybe the AI boom. So let's get your thoughts on that.
It's interesting what's happening with EVs, and I feel as if this space has had a come to Jesus moment in terms of how we're sourcing materials. We do not have the infrastructure in place. You have range anxiety, and they're quite frankly they're more expensive than the average person can afford. It's not like it's an easy repair like with combustible engines. Those batteries are really expensive um,
Mhm.
to replace. I also think when you mandate companies or you mandate consumers that you must have XYZ by a certain date, that doesn't sit well either. So I think there's supply chain issues, there's infrastructure issues certainly here. They were overproduced, you can't get rid of them. And I, you know, there's also the argument the amount of power that they use and consume, is that really saving the environment at the end of the day? So there's arguments to be made on both sides. Um, as far as AI, it's interesting, Mike. I could tell how trends ebb and flow by the hundreds of pitches I get every day. So like in
Yeah.
2018, 2019, everything was on blockchain. Everyone attached their story to blockchain. And that kind of like fizzled out once we realized, okay, these are the actual use cases, and it's a lot of junk calling your soda company XYZ blockchain.
Yeah.
We know what happened with that. So a lot of that's happening with AI. Every single pitch I'm getting is attached to AI. So the way that we are covering it from our perspective is looking at companies that have proven revenue sources. Their use cases are already in effect. They are solving problems that exist, not just attaching AI for the sake of doing so, right? And that's why, a lot of fintechs are helping to transform the financial services industry because they're identifying problems that need to be solved. So that's kind of what we're looking for when we're covering AI. How are they changing this? How is it changing the structure of industries? What are the use cases for advancing industries such as industrial, financial services, healthcare? That's kind of the tack that we're taking. So whether it's a public company and you're looking for the trade, or private companies or startups, we've had a number of VCs on the show basically saying the same thing. They're looking for not only companies that are solving problems, but also have clean balance sheets, governance is in place. They work well with the board. It's not simply growing at all costs, but executing operationally the right way.
Yep. And I mean, from a technical standpoint, I had mentioned to this before we had jumped on that, like you always look at the leader, and if Nvidia was kind of the leader in the AI space, and they have pulled back, into correction territory, which is 10%. That tends to be a technical indicator that maybe it's getting mature. It's kind, there's definitely I personally use AI pretty much every day in my job, whether I'm
Mhm.
using it for proofreading or I'm using it to create some kind of a graphic. I think that AI has definitely impacted our lives, but maybe the hype portion is starting to simmer down, right? Like we're no longer
Mhm.
into the hype. We're into the actual use phase. Like, how do we actually use this? Right. And I
Mhm.
know for most people in the country, that aren't in technology, aren't in business, they probably aren't impacted in AI at all, except for what they see, right?
Mhm.
Maybe they're just seeing AI generated, graphics. As far as the EV craze, I just went to Great Adventure with my son, and they have all these like, basically EV recharging parking spots. And, I kind of, me and my son looked at it and we were just, they look like they're just advertising, right? Like
Mhm.
they're empty spots that have an EV charger with an advertisement going. So, and the big concern there, at least from my perspective, is is that going to cause problems in the power grid? Because I know that there's all kinds of power grid problems in some parts of the country,
Hmm. Well, it takes a long
specifically.
time to charge them too.
Yeah, and I've seen a lot of people, like when I go to the mall and stuff, I see a lot of people just sitting in their car on their phone while they're charging their car, which it's not the most convenient technology when you're used to driving a gasoline driven car. So I do think that the government kind of regulated into existence, and maybe the demand is no longer there like it was initially.
Hmm.
So on that note, is there any final words? Otherwise, I'll see you in a month.
All right, sounds good. Enjoy vacation. I'll talk to you
All right.
soon.
Thank you. Take it easy.
See ya.
All right. So let's just jump to the charts. First thing that we're looking at here is of course oil. I'm going to just jump to Nvidia NVDA. Nvidia is right there at the bottom of its range. So I would say that this is just barely into correction territory. So remember, you got basically a $980 stock. That's from the high, which is 980. You take $100 off that, you got your 10% down. The question is whether or not if Nvidia breaks that low. If it does break the low, then Nvidia is kind of in bearish territory. Right now, Nvidia's price is below all of its moving averages. It's got a high, a double top, lower high, possible double top drop, and lower high. If it breaks the prior low, which is here at 820, then Nvidia could potentially be in trouble. Meta. Meta, another leader, is below its moving averages, although recently it did pop up a little bit. So it is kind of off its lows. It did get to around 490. Meta had some news that has this new AI assistant, so that's why it was up. But even if you look at it up, it was up, but it's pretty much given back all of its gains today. Now let's take a look at the QQQ overall. The QQQ overall down on the day. Momentum is slowing. We are kind of at support here at 423. So we're still down. We're down for 1, 2, 3, 4, 5 days. But momentum has slowed, and we might get a bounce. Tomorrow would be a very good day for the market to get some kind of a bounce, as it is Friday. And if you've been down all week, short covering going into the weekend. Now, obviously, we've had a lot of problems over the weekend. We've had attacks, drone attacks, and all kinds of geopolitical problems. So certainly that might be a reason not to cover your shorts. However, usually on a 4-day down week, you would get some short covering on a Friday. And certainly the momentum has slowed. The volume is down. So you could get a drift and or break, potentially over the weekend. But, again, that's to be determined. SPY, slightly more bullish than the QQQ. The QQQ obviously led the markets up. And the SPY is kind of flattish, although it does seem to have formed a little bit of a rounded bottom here. So we could still go, either way. We talked about GLD. So let's take a look at GLD. Certainly holding up, kind of a strong move up. Doesn't look like, certainly this could just be pausing. But the move up in gold has been pretty solid. We mentioned USO pulling back. Kind of everybody's kind of gotten used to the fact that Iran did a direct attack on Israel, and so far nothing's happened. Let's keep our fingers and toes crossed. Let's just take a look at XOM. Some big economy. Here's another big run up on XOM. A run from around $96, $97, running into 123 lately. ExxonMobil, not usually a big mover, but U.S. oil production is at all-time highs, which does bode well for companies like ExxonMobil. Let's take a look at the Dow, last but not least. Dow, big time off its highs, was 400, down at 377. Certainly on the DIA, we're not down 10% yet, but we are holding currently. We have not gone, we've gone down. These are down days, but we haven't made a significant break. And we do have a significant amount of support because this area was a significant area of resistance. So probably this 377 number is pretty significant. It does look very likely for us to have some kind of a bounce here. Obviously, by the time you view this, the market may have bounced already. Last but not least, let's look at the VIX. The VIX has been kind of drifting down after its big spike up for the last couple of days. So the VIX does not seem to be, it seems to have simmered down. The volatility has kind of dropped the last 2 days, 3 days. Well, 2 days anyway, not, today, and maybe let's see what happens tomorrow. But if volatility simmers down, then we could certainly get a little bit of support, and we might hold these levels. So on that note, I'm going to switch back and wrap things up. Stay up to date with all things DAS by signing up for our DAS monthly newsletter and email. Simply fill out the form at the bottom of our webpage, www.dastrader.com. Subscribe to our YouTube channel at DAS Trader TV and the DAS Newsroom reminders. Follow us on social media at DAS Trader, www.linkedin. You can check us out at Twitter, Facebook, and Instagram. I want to bid everybody the best with their trading. And see you next time. Trade well, everybody.